The euro risks falling to parity with the US dollar for the first time since late 2022, if a new transatlantic trade war weakens the already struggling eurozone economy, analysts have warned. The euro sank below $1.04 against the dollar, the weakest level since November 2022, last Friday after a survey of European purchasing managers showed eurozone private sector output has fallen this month. The threat of new U.S. tariffs on imports from Europe has pushed the euro lower since the U.S. election. It was worth $1.09 on 5 November, but has since dropped against the dollar for 3 weeks running. It ended last week at $1.41, but could have further to fall once Donald Trump's new administration lays out its economic plans. Trump has floated the idea of imposing a 60% to 100% levy on Chinese products and a 10% to 20% levy on goods from the rest of the world, which would make European exports to the U.S. less competitive and could damage economic growth. Deutsche Bank analyst George Saravelos has calculated that the full impact of Trump imposing new tariffs, clamping down on immigration, and increasing net fiscal spending by extending tax cuts is only 30% priced in by financial markets, indicating that the currency could experience a significant sell-off if the measures are implemented. Saravelos told clients last week that the bottom line is the market is still not pricing a lot of Trump. We remain bullish on the dollar and would view euro to dollar levels of $1 as pricing the intensity of the Trump policy mix at closer to 50%, with potential for even greater downside depending on what happens next year, Saravelos added. Last Friday's Dyer PMI survey showed eurozone business activity moved back into contraction in November, sparking a flurry of bets on steep cuts to interest rates in the single currency bloc next month. Money market pricing suggests investors now price a 50% chance of a half-point or 50 basis point rate cut at the European Central Bank's December meeting, with a smaller quarter-point cut now fully priced in. The eurozone deposit rate is 3.25%, following a cut last month. The fortunes of several key eurozone economies are in the spotlight, with Germany, traditionally the engine of the bloc, expected to hold a general election fought against the backdrop of a stagnating economy, and France forecast to experience a slowdown in growth. The composite eurozone PMI slumped to 48.1, thanks to an unexpected dive to 49.2 in the services sector that has hugely increased the odds of a 50 basis points rate cut in September, said foreign exchange market analyst Kyle Chapman at Ballinger Group. The euro is decisively breaking through key levels, falling below $1.04 for the first time since the energy crisis in late 2022. Having crossed this threshold, parity is no longer a huge leap, Chapman added.